In this video, I want to talk a little bit about my favorite setup for the portfolios, long-term position trading. And that's what we're going to do today. We're going to look at what I call the FAANG Plus. And this is a number of stocks that are Facebook, Apple, Amazon, Netflix, and Google, plus a couple of additionals like, NVIDIA, PayPal, Tesla. There's a few extras that I like to throw into that list. And so what you see here on the screen is this is my favorite list currently of long-term position holds. And so what we're going to do is we're going to go through and we're going to analyze each one of these. And today is Friday, so we're going to be looking at and see if there's not any opportunities for us to get into a market on Monday. And so this is a process of looking for long-term trends, and we're going to do accumulation and distribution based on the Wyckoff theory. All right, so we're going to talk a little bit about that. And we have that set up in the track and trade software using the bulls and bears and the AD and the momentum. All right, so those are the indicators that we're going to be using and paying attention to. And we're going to start off with Apple. So the first thing we want to do is we want to go back in time. We want to identify the areas of accumulation. We want to look for the areas of reaccumulation. We want to look for the markup, the markdown, and the distribution. All right. So the first thing we want to do is we want to look back in time and we want to identify all of the accumulation zones. And so accumulation is any time that we have the AD. You can see this is called the accumulation distribution model. And so any time that the red line is below the green line, we're coming out of distribution and we're going into markdown, and then when the market starts to go sideways, we start going into the accumulation stage. And so you can see that in the bulls and bears. We're just going to line up the bulls and bears. You can see when it leaves the yellow zone, comes into the red zone, and then when it leaves the red zone, goes back into the yellow zone, back into the accumulation or the markup zone. So this right here is the accumulation stage. And this is where we're going to start looking to get into a market. All right, we want to start picking up shares or options or positions along here. I'm going to draw a line across here. You can see this first fall. The market came back, rallied, and pulled back, and then it never did break this low again, and then we got a higher low. So if we draw a horizontal line across there, a lot of you will recognize that as an embedded head and shoulders. All right, I call it a Fibonacci crown. There's a number of methods that you can use to identify this pattern, but this pattern here, this is the head of an embedded head and shoulders. Let's go ahead and draw that in there. And we'll spend a little bit more time on this first one, and then we'll go a little bit faster in some of the others. But you can see that that's a left shoulder, a retracement. That's the head. It broke below the previous low. Now, Wyckoff would call that a Wyckoff spring. I call it a bear trap. So number of different ways of talking about the same thing. But this is the head of the embedded head and shoulders, or the spring, or the bear trap. It comes back up. We get a higher right shoulder, and then the market takes off once again. And that's kind of the pattern we're looking for down here in the red zone. We don't always get that perfect of a pattern. Generally what we get is we'll just get something like what's going on over here, where the market just comes down and starts to go sideways. And you can see on the accumulation model, which is right here, there's our accumulation. So we're coming in the markdown stage, which is coming out of the distribution stage, down through markdown, which is the yellow zone, and it comes down into the red zone, which is the accumulation once again. We break through the yellow zone, and that's an indication the market's starting to go into the markup session. So we're going to come in here and just draw this across here, and we're going to match that up. And so there is your accumulation zone. This is where you want to be looking to pick up some shares. And again, we've got that little left shoulder here. It's not as prevalent in this one as we come across. But then we have this lower point right here. And then we never did make a lower point from that. So then we got higher lows. And once we start getting higher lows, that's an indication that we're looking for the market to break and start to rally once again. Now, this is the accumulation stage because the bulls and bears is in the red zone and the accumulation is down in here. Now we've got a zone up in here where this is where the market's starting to go sideways up in here like this, but it's still up here above the green line, or the moving average of the accumulation and distribution. We did have a little break right in here on the accumulation distribution, but it stayed above it. This is called the reaccumulation. All right, so you get like an ABC pattern. So you get the accumulation here, you get the markup, the rally, the markup once again, and the market starts to rally once again. Generally, this second run isn't as long as the first run, but we are looking for a run to continue here on Apple. So this is the reaccumulation and then the continuation of the uptrend. So that's what we're looking for in Apple. If you want to price out some options on Apple, I would come down here. We're going to look just real quick. And just in the interest of time, I'm going to come out here and pick one. I'm not going to go through each one and load all of them and look at which ones have the highest volume and open interest. If this is a pattern you're interested in looking to go long on Apple right now, you can do that yourself and determine the long-term position. I like to go out at least 196 days. 140 is a little bit short for this strategy. Just because you buy a 300-day option or a 287-day option or a 196-day option doesn't mean you have to stay in the market that long. What you want to do is you want to read the patterns, and you want to go through, and when we go through the markup stage, which is coming up and out of the accumulation stage, the exit, of course, is that first blue light crossover right there. So you're going to pick up down here in the red zone, you're going to ride it up until it exits out. You're going to pick up here in the red zone, you're going to ride it up until it exits out. You're going to pick up down here in the reaccumulation zone, and we're going to ride it up until the blue light crosses. And hopefully it's higher than where we got in, right? And that's where we end up accumulating our positions. But the whole idea is that we're going to buy a long enough time frame period that we don't have to worry about time, so that time is not a factor. Now, yes, we have to pay a little bit more to buy a further out option, but it gives us a little bit of breathing room. We're not up here trading with 14-day, 42-day options and have to have the market absolutely, burst out of there like a mad dog, like a rocket ship to make any money. We got time. We can buy time. And then, of course, if we have more time, we also have theta working in our favor. We don't have as much theta decay. When you get these shorter term options, theta starts degrading so quickly that oftentimes you can be right on the market trend but still lose money because theta decayed so quickly it outperformed the movement of the market. So this is why we like to go out here a little bit further. And I'm just going to click this one right here. We're going to come in 287 day and we'll just see how that turns out. 287 days and we'll load that one. And you can see that right here at the money call option is $1,400. So we could put a $1,400 option. Open interest is plenty high, 11,000. 362 of them traded today. So we can go ahead. We can just buy that. We'll put that into our demo account. This is the demo account. In my real money account, I've already got several of these. I've been doing this strategy for some time, of course, and we're building up our portfolio over time. So we're going to come in and I'm just going to go ahead, and since we're in the demo account, I'm just going to mark it into this. I'm not going to play the bid and ask game. So there we go. We've got our position in Apple. Okay, let's go over and take a look at Adobe. Now this is Adobe. We're going to come in here and very quickly, I would just want to show you my settings in the bulls and bears. You can see I got it set to a sensitivity of 72. I'm on the traditional formula, and the key is down here that I have arrows on all color changes. And when I do that, what that does is it gives us an arrow each time the market breaks out of the accumulation or the reaccumulation stage. So you can see when it goes into accumulation, it's down. When it goes out of accumulation and into the markup stage, it's up. So that's the up arrow. It's not necessarily a buy signal. You've heard me say that before. It's more of the distribution or the markup stage. Okay, we're breaking out of the accumulation stage. So let's come back over. What we're going to do is we're going to come back in, and just quickly we're going to draw in here our accumulation stage. So here's accumulation. Here's accumulation. Let's correspond that with what we're seeing on the screen. Here's accumulation right here. You can see the arrow breaking out. We got again, the reaccumulation right in here, and then the arrow breaking us out. So this is where we want to be buyers. When it's coming down in here, sometimes we'll get a down, we'll get the red, and we'll get a little bit of a yellow, and a second down, and the second red, and then it'll accumulate, and then we'll get a rally at that point, and the market breaks out. This has been a strong market, so we've only had an accumulation and then a breakout, an accumulation and then a breakout. This to me looks more like an accumulation, a markup, and then a reaccumulation, and then a continuation of the markup. But because it did come all the way back down into the red and down in here, and it broke below the accumulation distribution, the model down in here, it's not reaccumulation, this is an accumulation. Reaccumulation is generally when it starts to go sideways and has another breakout like in this area here. So this is where we had a sideways for an entire month. It broke out the top, but yet the red line stayed above the green line, so that's reaccumulation. All right, there's no red bars in there, but we just had a dead kind of sideways market, and then it broke and started to run once again. So that's your reaccumulation. We don't generally get in on an initial order here, or I don't generally get in on an initial order here. This is where I would add on to a position if I already had positions down here. So let's go into the next one. This is Amazon. Amazon, we're going to do the same thing very quickly. We're going to come in and just go back in time, and you can see where the accumulation stage was, another accumulation stage, and then we were in an accumulation stage. We had a bad earnings or something right here, I think is what that was. And then we came in here and we've gone through accumulation and started to rally once again. So this is the uptrend that we're continuing to look forward to on Amazon. It's already taken off and gone. Whether you think that that's a good time to get in for the next leg up or not, I'll leave that up to you. But that's what we're looking at right here. If we just draw these boxes in here, you can see That's our accumulation stage. Again, accumulation right here, and again, accumulation right here. Now, where this term comes from is accumulation, is this is what the big banks do. When the market goes up and it has a big run and then it flushes and falls all the way back down, this is where the big banks start adding in, and they slowly add in positions over time. They don't just jump in and jump out. They don't cannonball like you and I do, where we just put our whole account in the market all at once, or pull our whole account out of the market all at once. Hopefully you're not doing that. I call that cannonballing, when you just like, oh, the market's going up, I'm going to put my entire account in there. Boom, drop my whole bomb on there, and I cannonball myself in. So we don't recommend you do that. Act like a bank and slowly accumulate over a period of time, and you get an average position size. And then when it breaks, you've got a nice built-up size position, and you can ride the markup trend up. All right, so that's what we're doing. That's why we call it accumulation. And then distribution, we don't dump all of our stocks all at once either. We don't dump our entire position. If you picked up 4 or 5 or 6 options along the way, then when you get up into the markup stage, you don't have to dump all of them. You can just start dumping them off slowly as you get your different signals. So let's come in here and we're going to go to DocuSign. And again, DocuSign, we're just going to come down here very quickly and we'll just review this one. DocuSign is, there's your markups, or your accumulation stage. Here's another accumulation stage. Wasn't much of a markup or much of a rally after that one right there. This is where we kind of got that first drawdown, a little bit of a rally, and then it came down into the second drawdown, or into the second accumulation stage, before we got the second big run. We're in a little bit of an accumulation stage right here. You can see right now we're going into accumulation. And so this one here, again, because it's red and it came all the way down below, we're going to call it accumulation. We're not going to call it reaccumulation. So we could initiate a new order here. So let's go ahead and we're going to come into the options, and we broke out. We got the arrow to the upside. It did pull back against us a little bit, but it did give us a rally bar today. We're going to start accumulating some positions in here. I'm going to come out and we're going to drop down. Let's just do 196 days. And you can see in here on DocuSign, it's a $309 per share, so the options are a little bit more expensive right there at the money call. So we can go ahead and we can buy one of those. So we'll just go ahead, and I'm just going to, again, market order ourselves into that thing. So there we go. We have one of those. Now let's come down to Facebook. Facebook, beautiful big long uptrend. This market's really been doing well. This big accumulation stage down here was where we all got in for that breakout. And whether you rode it all the way up or not, that's to be a question. But we do have lots of little pullbacks in here. This wasn't a real, it looks beautiful, but it's real kind of choppy and gone sideways. You'd really need to have some long-term options and kind of held on to this market to achieve this, because it did have lots of pullbacks. It kind of broke the blue lights and scared you. But we did have these accumulation arrows. Notice how effective these are. And this is why we love this bulls and bears, because it tells you to buy, buy, buy all the way up an uptrend, whereas a lot of indicators tell you to sell, sell, sell all the way up an uptrend. So big difference. And this is the accumulation model that we're looking at and why it's so important to watch. So here's another accumulation stage right in here. We've got a tiny one right in here, which was right here. We got a little bit of pullback here. The red line did not drop below the blue line, so this right here is not accumulation, it's a reaccumulation. And we're just up here in a kind of a distribution area right now. So as this market's continued to rise, this is what we're watching, but I'm not anxious to jump into this market right now. I want to see more of a fallback. I want to see a big red zone and a nice accumulation area. So we're going to come into this is actually FNGU. This is FAANG. This is the micro index. So this is, all of the FAANG stocks plus a few extras in a single ETF. So you can go through and look at that. That's FNGU. But we're looking at the individual stocks today. So here's Google. Now Google is in here twice because they have two classes of stock. They have the Class A and the Class C. And so this is the Class C. I think this one here is just the standard Google, which I think is the Class A. So this is Class C. You can see I've drawn a few trend lines in here on each one of the breaks, but the accumulation locations, which is what we're kind of focusing on today, are these pullback areas into the red zone. And you can see where those occurred on the indicator and where we'd have got in. So these little places right in here, these are going to be a reaccumulation. Reaccumulation is a little bit more difficult to trade than the accumulation. The accumulation zones are a lot more obvious. These are oftentimes the scary spots where we think they might be distribution zones, and we're going to get a full pullback into the red zone once again. So we have to play these based on the Elliott Wave rules, and we have to look for our 3 drive patterns. So here's drive 1, Here's drive 2, drive 3, if I can draw those arrows. And we're actually going into a fourth drive, which is really rare, which means we want to combine that one and make this drive 1, drive 2, and we're going into drive 3 at this point. And so this is what we're looking for on the Google. Again, not real anxious to get into it right now. There's not an opportunity for us. We're going to actually look for a pullback and start looking for the opportunity to get a accumulation stage once again. That's going to be the same with this one here. So we're going to go into IBM. Now IBM, I like IBM because we've actually got an accumulation stage here. We got a reaccumulation here. And we had another small reaccumulation here. Again, it's difficult, but if you follow the Elliott Wave rules like we teach, there's drive 1, drive 2, drive 3, then you can see how those accumulation stages come in. Now we're coming into the distribution stage, which comes in right in here where we break below the green line, which happened and occurred right in here. And now we're looking for this market to give us a spring, which we got right here. So we got that left shoulder. We got the head, the embedded head, or the spring, as Wyckoff calls them, the Wyckoff spring. I call them, again, the bear trap, because they come down, break down, think that the market's going to fall, and then it starts to rally once again. And then this is where we need to get a higher right shoulder than we have head. This cannot break below this level here. So this has to be higher than this one here. That's how you get higher lows. And if that comes in, which it did, and it starts to rally, we're going to start looking for a continuation of the uptrend. So this is a nice spot, and we could definitely get another down draw and another accumulation here and then the rally, but we're going to go ahead and start accumulating. Not big share size, not lots of options, but we're going to go ahead and we're going to start accumulating right in here. And so I'm going to come over to my options tab. I'm going to drop this down. We're going to come out again about this one. We're going to do 287 days, and 287 days, not the highest of the open interest, so we might want to check some of the others, but in the interest of time, and because we're in the demo account, I'm going to go ahead and I'm just going to mark it into this one. We're going to put that in there. And we're going to pick up an option in case this market wants to rally out of this accumulation stage. Now we're going to come in here in the next one. We're going to go to Microsoft. Microsoft, we're going to come in and draw our accumulation boxes once again. Down here, the indicator and the indicator right there. And we're going to look at where that started to occur up here on the chart. And there's our distribution and accumulation stage. And again, not very prevalent in there, but you can see that we got kind of a little double bottom in there. We didn't get the Wyckoff spring, or we didn't get the bear trap, but we did start getting higher lows. And then this market broke out. We got our indication that the market is going to start to rally out of this accumulation stage, and that was a pretty darn good rally. So we came up here. We got a little bit of a reaccumulation area in here as we broke above this next blue light right in there. And we are on the second drive of this big move. So drive 1, drive 2. We're going to look for this market to break. It might have just broke it today or yesterday. We'll have to wait and see what the mathematics come out to be. But this looks like another small area of reaccumulation. Now, whether you want to be a buyer right in here, we are looking for that third drive high on the Elliott Wave. And oftentimes the third drive is not as big as the second and first drive. It's usually the smaller drive up in there before we start getting this thing pull back and go back into the accumulation stage. So I'm not real anxious to put a position on right now. We'll have to watch this one, see if we don't get a pullback right in here. And that's what we see on Microsoft. So come into NVIDIA. NVIDIA, another great stock. We're going to come in here and draw a couple of boxes for you just off of the accumulation. Let's go back a little bit farther. We can see right here was a nice accumulation box on our indicator. And here was another one right here on our indicator. And then here was another one right here on the indicator. Let's draw that one in there. We got this one here, this one here. So this one's already broke out. So it already took off across the accumulation stage, and it's already in the first rally. We're a little bit chasing this one, but this is NVIDIA, and we've already gone through the accumulation, and we're looking forward to continue. We got a nice bar today. Let's go ahead, and we're going to go in and put an option on this one. Well, let's go out again. We're going to go out maybe 196 days. Again, I'm just picking one of these randomly. You're going to want to go through and make sure you got the one that's got the highest volume and open interest. We're going to come in here. We're going to buy that at the money. We'll just mark it into that market, and there we go. We got our position in a continuation pattern for NVIDIA. We come into PayPal. Again, PayPal, we're going to come through, and let's go through and look at this accumulation here. You can see right down here on the indicator, we've got the accumulation, which is going right through here. We got this one here, accumulation. So we got this accumulation right in here. And we got this accumulation, which started right in here. A little ugly, but it did break out at the same spot. So right in there, went in distribution, back into accumulation. So there again, we got that embedded head and shoulders. We got that bear trap right there. So there's our little left shoulder neckline, head, neckline, little pullback, and then the rally and the break. So let's go ahead and just for fun, let's draw that one in there. Head right here, there's our neckline, our right shoulder. So there, breaking above that trend line right there was our signal for entry. And of course, we got the bulls and bears arrow on here. This is PayPal. We got accumulation. We got the markup, distribution, accumulation. Now we're going to go or anticipate an additional markup in here. We could get a second one and get another box down in here. That's always, that's always the chance. There's nothing that says that every time we get one of these that it's going to take off and rip higher. We could get the second one down and come back in. That's why we don't want to come in and just, cannonball into this thing with our entire portfolio. So we're going to come in here and we're going to go to the options and we're going to go in and we're going to get a long-term option out here just in case this thing wants to break lower and come down. We can hold on to this one and rally and then look for the next one. We have a whole year for us to continue to accumulate through this time, or we can, if this thing wants to run, we'll be there for it. So let's go through and let's buy one of these. It's $3,000. We're just going to buy one, mark it into that thing. And I'm marketing into this thing. I'd recommend that when you do get into this, you bid on it. I got into one this afternoon where the spread on it was like $60. And I put it all the way down and I said, well, I'm going to bid for it and only pay $20. And they gave it to me. And, when they do that, it makes you feel like, oh, I should have bid lower. But I went from a $60 spread cost and only paid $20 when it was 60. So save myself $40 right out of the gate. So I'd recommend you bid for these, not just mark it in like I'm doing. The reason I'm marketing in is just for the interest of time and because it's here on the demo account, they don't let you bid for them anyway. So here's the S&P, the SPY. I'm not real interested in putting any positions on this one in this account right now, but you can see just quickly, if you're an S&P trader, that you can see the little accumulation zones very prominently in here as this market went through all of these pullbacks and accumulation zones. So you can see that quite readily, quite handily in the software. The Bulls and Bears does a good job. You can see how they correspond a little bit here with the indicator down underneath, but these little pop downs kind of correspond. You can see with the Bulls and Bears right in here. And then this one didn't break below. It was too strong and continued to rally. So that's kind of just a quick look at accumulating going on in the S&P 500. Let's come down here to Tesla. As we come into Tesla's been struggling a little bit. It used to be the darling of the industry. Elon Musk has had a little bit of popularity troubles going on. He's a little bit more vocal, I think, sometimes than he should be. And so I think he sometimes sticks his foot in his mouth. And so he's lost a little bit of notoriety with some of the Reddit groups and some of the kids who like to chase around and follow him. There's still a lot of people who love Elon Musk. I mean, we all do, right? What an amazing guy that guy is. But because of that, I think a lot of the driving factors that drive a lot of Tesla stock is how well Elon Musk, as the president of that company, the CEO, gets out there and markets it. And so he's been sometimes not been doing that great of a job of marketing. And so this company's been struggling a little bit as you see it breaking through some of these accumulation zones, but very small ones. I mean, we're coming in here. We had a big one right in here, you can see. And then it's just been kind of choppy. We got a little bit here. We got a little bit more here. Kind of a little choppy one here, little accumulation. But Tesla's been tough. It's been tough to try and get this. This is a pretty obvious little 3-drive pattern, drive 1, drive 2, drive 3. Whether we're going to get a continuation of the uptrend, I would expect a little bit of a pullback. What I'd want to see before we got into Tesla was a little bit of a stronger accumulation stage down in here and then something that we could blast up out of. I don't want to see it do poorly, but this is what it's in for. We got 3 drives up in here, 3 accumulation stages. Let's see it pull back into a stronger accumulation before we start trading Tesla. So let's come into Twitter. This is Twitter. I had Twitter in here. It's not the greatest stock from the fundamental side of it, and they get a lot of controversy. doing stupid things like kicking the previous president of the United States off. I think that was a big stupid mistake. A lot of people like that, but I'm in the camp that I think that was a big stupid mistake. But nonetheless, they're here in the accumulation stage. So we're down here in accumulation right now. And since Twitter is very similar to some of the other, social media stocks like Facebook and Google, then, we're going to see some of the same type of patterns. So this is what we're looking for. This is a little accumulation stage. Now, this is one of those second accumulation stages. The market rallied really hard, came back, gave you the accumulation idea that it was going to go break once more, but it went into that Elliott Wave ABC retracement pattern, right? So we get an A, B, and a C retracement pattern off that Elliott Wave drive, which is your ABC. If we come in here with the Fibonacci projection tool, we're going to see that come down A, B, C, and it came right back down into this 100% level. And this is where we went into the accumulation stage once again, broke out and started to go back up. So now we're back in this, almost another drive pattern. So we're in a strong level of accumulation, and we should see this thing start to rally. Now, it's still coming down, and we got a break, and we got an arrow. We're still coming down a little bit. We haven't got the right. This looks like to me. This is what I'm looking at. Okay, so this is looking like this is the possibility of the left shoulder. This is going to be the neckline, and we'll look for that Wyckoff spring, or what we call the head of the embedded head and shoulders formation. Then we need to start seeing higher lows. And then this is where we should start seeing this thing come up. So there's an opportunity for accumulation. We're going to watch this come down, see if it can't break this left shoulder, give us a bear trap, and that's where we want to start being a buyer, start accumulating our positions, and we'll start looking for this market to rally once again. And that's just a quick rundown of FAANG Plus, and hopefully that's helpful for you. And if you don't use it on these stocks, go and do this on your own stocks and the stocks that you have in your portfolio, and see where you're at in the accumulation distribution stage.